Hey guys, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was November 6, 2009, a Friday here, and of course finishing up a great week, first week of the month of November. Check out our free resource online. Great resource, our YouTube page /School of Trade. While you're there guys, please subscribe to our YouTube channel and please rate and comment on this video. Now guys, had a great day in the room today, just shy of $1,000 on 4 contracts today in the live trade room. We took 5-6 trades today, lots of winners in the market. And of course, we'll show you guys more about that once we finish up here. 9,000 last month. We've got about a quarter of the way already this month already. So we're $2,000, $2,100 so far this month of November, and we're only through the first week, guys. We've got 3 full weeks to go here, so we are definitely shooting for that $10,000 goal here this month of November. Term of the day today, guys, is price patterns or high percentage setups. Now, if you guys were with us in our HotCom presentation last night, we talked about some of the things that I can't trade without, and one of them are these price patterns. Now, price patterns should be predictable and recognizable patterns we see in the price action chart. They can be bullish price patterns, bearish price patterns. They could continue a trend, or they could also be reversing a trend. Price patterns are one of the easiest ways of identifying overall market sentiment, right? What is the bias in the market, bullish or bearish? We look for these price patterns to technically read the minds of the traders. The traders in the market, even though we can't talk to them directly, they leave their footprints. And those footprints are on our time and sales windows and on our charts in the form of price patterns. So those footprints allow us to kind of gather clues and read the minds of other traders, kind of what they were thinking previously. We use price patterns for entries, for our management, and for exits. So we use these price patterns throughout the entire trading process. Very important to watch for the price patterns around major levels of support and resistance. Now, we talked about some of the things that we really can't trade without, right? High profile levels of support and resistance are one thing. Price patterns are another thing. So important to look for these high profile levels of support and resistance, and then around those levels we then watch for price patterns. We look for swing highs, we look for swing lows. We want to make sure these price patterns are nice and easy to see on your charts, right? Very important. These price patterns, they got to be easy to see. It makes no sense to have a set of patterns that we can barely keep up with as the market begins to move. So make sure they're easy to see, and some of the most common price patterns are going to be these swing highs and swing lows. Now, of course, in our live trade room, we go over 3 of our high percentage price patterns. This is the wave pattern, the breaker pattern, and the two-step pattern. Now, of course, we'll talk about these a little bit, but obviously we'll go over most of these things live in real time in our live trade room. We talk about the wave pattern first. This is a trend continuation pattern, and it looks like this. A wave pattern to the short side will be shorting the retracement into a falling trigger line. Of course, to the opposite side, you're going to be buying the pullback to a rising trigger line. The breaker pattern looks like this. The breaker pattern, just like it sounds, right, it's breaking through that level of resistance, in this case, making that swing high level, and then breaking through that swing high. Of course, that price pattern is the exact same to the opposite side. In this case, the breaker pattern, right, it breaks through that support level this time, creates a swing low, and then breaks that swing low, called our breaker pattern. Then, of course, you have our counter trend pattern, called our two-step pattern. This, of course, looks to go against the short-term trend. So as price, of course, tries to break below this level of support, it finds support at that red line. It then breaks above a recently made swing high there, that blue line, and we take it against the short-term trend, bouncing off of that level of support. The exact is true for the opposite side on a two-step to the short side. We have a level of resistance overhead. That red line of resistance will, of course, sellers will step in, and because price can't break through that high, we'll then take a short trade, counter trend, of course, once we break below that swing low. And again, guys, these 3 patterns, the wave, the breaker, and the two-step, we, of course, will go over those guys in real time in our live trade room. So come out tomorrow morning, actually Monday morning, and come join us at 7:45. Don't forget, guys, next week we have Tuesdays and Thursdays. We do free webinars at 11:30 Eastern Time. Next Tuesday, we're talking about tape reading. So you don't want to miss out next Tuesday's webinar at 11:30 for tape reading. Grab a copy of the beginner's course. The beginner's course is everything you need to know about how we trade in our live trade room. Great way to get a good head start on your week next week. Let's talk about some of the trades we took today. Now, we put almost $1,000 in our pocket this morning, and a lot of it had to do with the fact that we had some great volume that came in after non-farm payrolls at 8:30 Eastern Time. So we pretty much knew we had to wait for 8:30 this morning, then we should have saw some good volume, and that's exactly what happened. 854 was our first trade of the day here, guys, and this was the first of many trades here that took us well over our daily goal today, over almost up to $1,000 here on 4 contracts. 54 minutes past the hour of 8 o'clock. This is a breaker long on the crude here. Now, the first 3 trades of the day, guys, were all on crude. We have that swing high here at 56. We got that horizontal blue line. We got entry there at 59 was the fill. We took 4 ticks for the first target, 8 ticks for the second target, and of course, we got stopped out there at the point of entry as it came right back down. You can see it kind of rose up there a little bit, just below that 77.7 level, and then of course came right back down. So 16 ticks there on the first trade. That was of course a trend continuation pattern, going now with the short-term trend back to the upside here on the crude. 918 and then 938. So still before the US Open at 918 here. First trade again, still seeing a lot of that good movement after that non-farm payroll number at 830. Once again, this was a two-step short pattern, a counter trend trade here. Now this pattern in particular though, we're looking to go against the short-term trend. So it began to show signs of these sellers stepping in and pushing this thing back down. We have your swing low level there. That horizontal blue line is there at 77.80, right at 80 even. We then waited for price to break a couple ticks below that 80 level, looking for follow through. The fill at 77, we took 4 ticks, and as you can see, very short-lived move there. It quickly then returned back to its long-term trend, back to the upside here. So it bounced us out of the point of entry, but we had already grabbed 80 bucks out of this with 8 ticks on the crude at 918. Now it wasn't long thereafter, we got back to trading with the trend here at 938. On crude still here, a breaker long pattern right now going with the trend. We saw that 34 level was our swing high. At swing high, we got above entry here was at 41 was the fill. We got another 8 ticks here, plus 4, and then of course you can see it came right back down and stopped us out at our point of entry. When we hit our first target, we're going to move our stop up to my point of entry. That locks out all that risk and of course will not allow me to allow a winner to turn into a loser. So a very important key component to our trade management system here is that we move our stop to entry right away. That way, if this thing was to reverse and crumble and return back to the downside, we wouldn't be sitting there in a losing trade. So we get out of this, of course, 80 bucks at 938, 80 bucks at 918, and of course we are still moving here, guys. Now up until about 940 here, we hadn't really made that much money yet, right? We made a little bit of money here on crude, but it was at the euro now, just before 10 o'clock, where we really made a big chunk of change here. 941 here in the euro. 941, this is on the euro. 6E is simple. This is a breaker long. Now this is a great trade. I think almost everybody in the room grabbed this one along with us, called it live in real time, well ahead of time. 87 was a swing high here, guys. Above 87, of course, we're looking for a breaker long going with the trend. We took targets at 4 ticks, 8 ticks, and then 9 ticks, totaling 25 ticks there. 312 bucks on one trade, guys. Almost a 10% return on one trade. And we weren't done there. We had 2 more trades to go. Back on crude after, of course, 10 o'clock came and went. We had to make sure we waited for our wholesale inventory number to come out at 10 o'clock. We waited after that, 10:26. We started seeing crude start to drop back down. Now, if you recall, we had gotten long buying crude on the way up. Now we're going short, selling crude on the way down. We literally got every single available tick out of this move. We bought it on the way going up, right before 9:30. Now after 10 o'clock, we're now selling it on the way down. And of course, at 10:26, here was a crude oil breaker short. The fill here was at 67, below that 69 there, that swing low at 69. Great example, guys, here. This first trade got us 19 ticks, plus 4, plus 8, plus 3 for 190. But a small majority of our guests, though, jumped in on the re-entry. We call the re-entry there just below that at 77.61. So a great example there, guys, of how sometimes the market's going to give us kind of this gift from the markets to get a re-entry here to jump right back in. I was still in the trade, of course, but a great example there of a re-entry as we looked for another swing low to get in below it. Now, the only concern there was make sure you're not in the chop zone. That was pretty much the only reason why that re-entry was qualifiable, was because we weren't too low, right, too far away from that 69 area there, and of course, it wasn't in the chop zone. So stay above the chop zone and you're all good to go. Next up and final trade, guys, 10:30 here, just a couple moments later on the gold, a breaker short here at 93 even. We took 4 ticks, of course, 2 targets out at 4, that locks up 8 ticks. And guys, on this one, kind of a funky price pattern. We originally had momentum pointing up for a short trade, which means we didn't take the first trade. We used a re-entry, though, once we, of course, saw momentum then curl back over. We saw the pace the tape indicator go from red to yellow up to green. Momentum was pointing down for my short trade, and we saw some big sellers step in. That's what got us in, of course, after the initial entry that didn't qualify. We looked for the re-entry, took the re-entry, and another 80 bucks there in our pocket. Add it all up, guys, just shy of 1,000 bucks here in the room today. Did a wonderful job, and as always, come out tomorrow morning, on Monday morning, I should say, at 7:45 Eastern Time, and we'll open the live trade room for the U.S. session. We'll give you free 3 weeks as part of our trial. Want to remind you guys to pick up a copy of the beginner's course this weekend for next week. Make sure you guys check out our YouTube page and make sure you rate and comment on those videos. My name is Joseph James. Thank you so much for your time today. We'll see you guys next week in the room. For lifetime information, on lifetime membership, please drop us an email, sales@schooloftrade.com. And as always, guys, we'll see you Monday morning, 7:45 a.m. Don't miss a tick.